looking, so you can see the logo with me and Kelly on it. Is that what you see right now?
Yes, that's
Okay,
right.
perfect. So as I'm talking to you, I probably will be looking off to the side because I've got a second screen over there, and that's what you guys are actually seeing. Um, so my goal for doing this, like we talked about, is, and this will probably take us maybe 20-30 minutes, depending on if you guys have questions and as long as we need to stay on for that. But my goal to do this is, especially with you guys being first-time home buyers, is to explain the process to you and explain to you what we need to do with regards to making sure the process is ready to move when you guys get back. And you said you'll be back in the country July 14th, right?
Yes, that's
Okay.
correct.
Okay. All right. So the first thing we want to kind of look at is the status of the market. And the reason that this is important is because this is going to realistically set your expectations. So for example, if you guys are, we have some buyers that'll come into the market and their whole objective will be, they'll have rules in place like, I'm not going to pay above asking price, I'm not going to waive any contingencies, I'm not going to all these things they're not willing to do. So depending on what the status of the market is, I can help them understand, yes, you can do those things, or no, you can't. So the status of the market currently, if you look at just a real quick recap, this is a market report that I do every week. And you guys are going to start getting this if you haven't already seen it. It's emailed out every Thursday or Friday. And what happens is Kelly and I will talk about some subject that's important to real estate transactions. And then I dive into these numbers each and every week because these numbers change. And as these numbers change, that the strategy of what we use in the market for that week changes. So gives us some real-time data versus waiting on Redfin reports and stuff like that, which can have like a 60-day lag time. So they're not realistic for what's going on in the market. So if you look at buyer activity, this is for the last 7 days. Buyer activity is the orange line, and that's a lot higher than inventory. So demand is a lot higher than supply. So what that means is we're in a seller's market. So what that means for a seller's market means that there are more buyers for every property than there are properties out there. So as we start this process, when you guys get back in the States, assuming that the status is what it is now, we're going to have to be very strategic with our offers. We're going to have to discuss how to make your offer as strong as possible and how to compete against other buyers. We're not going to go into a lot of detail about that tonight, but I just want you to kind of be aware of where we are in the market so you have a realistic expectation. Okay, does that make sense?
Yes,
Okay. All right. So this is a bird's eye view of what the market or what the process looks like with regards to getting from where you are right now to getting to settlement. So the first step, get over here. Okay, the first step is we need to build your team. And so we're down here, getting lender pre-approval and building a team. So what happens is, well, the reason we need to go ahead and build the team right now is because when you go in and you find the property you want, we're going to have to move very quickly. So for example, we just put an offer in for a client who's in a similar price point with you. She's a little bit lower. She's in the 300,000 range. But we looked at 2 properties, and we had about probably 6 hours to get her pre-approval letter made for the offer, to get her offer written and get it submitted. So it's important that we have all of your team members in place so that we can move quickly versus when you find the property you love, scrambling, trying to find the people to make the transaction happen. So the first team member that you need is obviously a realtor. In Virginia, we have what's called representation. So what I mean by representation is the seller or the person that's selling the property has an agent that specifically represents that seller. So that agent represents the seller's best interest. That agent has confidentiality with the seller, and that agent has a fiduciary responsibility to the seller, which means that that agent puts the seller's interest above all. So you need, on the buyer side, you need an agent to represent you. So that's what, if you choose to work with Kelly and myself, that's what we will do for you. So we will have a fiduciary responsibility with you, which means that we have to look out for your best interest. We have to negotiate on your behalf. We are going to represent you and your interests above all else. Okay. So you want to team up with a realtor, and you want to have that person, like, from the get-go, you need that person with you. Okay. So hopefully that's Kelly and I. If you have somebody else, let me know, but that's what the goal is. Buyer versus seller representation, we just talked about that. You want to go ahead and get a home inspector. So I'm going to send you an email when we get finished with this, and it's going to have professionals that we have worked with successfully in every category that I'm about to explain to you. The home inspector, what he does is he goes in and inspects the property, makes sure he inspects all of the functional aspects of the property, making sure the windows are good, making sure if you have to worry about the roof is good, your HVAC, your water heater, your appliances, the electrical system, the plumbing. He just checks all these things for you. A lot of times right now in this market, we're having to waive home inspection when we put our offer in. But you can do a pre-offer inspection, which is why we want you to go ahead and know who your inspector is going to be, so that if you decide you want a property and you want to do a pre-offer inspection, we can try to get that done and know who that person is. When I send you the list over, the inspector that I'm only going to send you one inspector. You can go with whoever you want to. It's just we have one inspector that we've worked with numerous times that I really trust. He did our home inspection on our house. I haven't really met any other inspectors that I trust as much as I do him. I've met some good inspectors, but I just really like him and trust him. So you're welcome again to use anybody you want to, but I'm only sending you one recommendation as with regards to inspector. So the pre-offer inspection versus standard inspection, that's what we just talked about. And I'll explain a little bit more about where the inspection fits into the process in a second. Specialized inspectors. So if you're looking at a property, which you guys probably won't be with the type of property you're looking at, but if the property you're looking at has a septic system or a well, then we would have different inspectors that would do that inspection. If there's a pool and you want to have that inspected, there's a different professional that would inspect that. Roof and exterior foundation. These are all specialized areas. So what happens is your general inspector will go in and do an inspection, and if he sees something that suggests maybe you should get the pool or the roof inspected or something, he would make that recommendation and we would find you one of those inspectors. Septic and well, we just automatically do that. If you're buying a house that has a septic system or a well system, then we're going to have those inspected for you. Okay, title company is the next thing. So you need to have your realtor, you need to have your home inspector, and you need to have your title company. So what the title company does is the title company is the company that holds all of the money in a transaction. So we're going to talk in a couple minutes about the earnest money deposit. Your title company is the one that holds that. They're the ones that help you guys buy title insurance. They go through all the legal filings. They coordinate the transaction with the county. They basically handle all the legal aspects of the transaction. In Virginia, you as the buyer get to choose the title company. So that's why I'm going to send you over a couple of good title companies, and you can check them out, call them, ask them questions, figure out which ones you like better and want to use. But it's good to go ahead and get them picked, because we have to know what title company you're going to use when you write your offer, because it's a part of the contract. Okay. Does that make sense?
Yes, that makes sense.
Okay. Just for informational purposes, sometimes there will be sellers on a property that prefer a certain title company. You always have the right to choose whichever one you want, but if they they want a certain title company, it can sometimes strengthen your offer to use theirs. So if that's the case, then we would give you our feedback on that title company, tell you what we know about them, and try to make a decision from there. Okay, so that's the title company. Lender selection. So you guys already, who's your lender?
Lender?
Yeah, the pre-approval letter you said you had.
Our bank,
Okay, which bank is that?
Bank of America.
Okay. Okay, so Bank of America. I'm just gonna make a note of that. Okay. So lender selection is very, very important, especially in this market right now. Number one, because you want to make sure you're getting the best interest rate, right? The best interest rate you possibly can. Bank of America is probably going to be very, very competitive with their interest rates. But there's other factors that we have to look at. We have to look at and see if I have notes on here. Well, let me go through these qualifications real quick. So a pre-qualification is a letter that's issued when you call the bank and you say, hey, these are my assets, these are my liabilities, and they say, based on that, we can give you this letter. Pre-qualification means nothing when you submit an offer, and you always have to send a pre-approval letter with your offer. So that's the pre-qualification. Again, that's not valid in this market. Pre-approval, which is probably what you already have, is where they actually see your documents, where you send them your tax returns, you send them your debts, you send them the minimum documents so that they can take you through what's called desktop underwriting and get you a pre-approval. That's a legitimate pre-approval letter that we can provide with an offer. When you got your pre-approval through Bank of America, did they ask you for documents?
Actually, we don't have a document from Bank of America. We did that. We did the all steps online, from the app. But we still have to go to the bank and check with one of their representative to finalize that approval.
Got it. Okay.
We don't have that that document that
Okay.
I think we need for lender selection.
Okay, perfect. Okay, so that's a good point. So you probably have a pre-qualification at this point. So we do need to get that pre-approval letter when we start looking seriously. I know you guys are going to be out of the country for a little while, so probably best to do that when you come back, so that it's good for a period of time while we're actually looking. So
yeah, once we come back from Albania, we'll go to the bank and get that. Do the final step for getting the document needed for lender.
Okay. The other thing that we want to look at is a pre-offer full approval. And what a pre-offer full approval is basically, and I don't know if Bank of America does this, so I'm going to talk a little bit about Bank of America versus other lenders. A pre-offer full approval is where they actually, so whenever you buy a property, to get your loan approved and get a mortgage on a property, they have to pre-qualify. They have to approve you, the borrower, and they have to approve the building. So a pre-offer full approval is they go ahead and they do all of the documentation, all of the underwriting, everything to give you a full approval. And then all we have to do is find the building. But if you get that pre-offer full approval, then what happens is when we go in and we start writing offers, if you don't have that pre-offer full approval, we have to do what's called a finance contingency. That finance contingency is going to weaken your offer. It protects you, but it's going to weaken your offer. So if you don't have that pre-offer full approval, then you've weakened your offer by using that finance contingency. So we want to try to find you a lender, if we can make the rates work and everything, where they will do that pre-offer full approval for you so you can do a quicker closing, which I'll explain to you what that means in just a second. And they need to be available on nights and weekends because things do come up during the transaction process where there's like things that have to be handled like immediately. And Bank of America, typically their loan officers are available from 9 to 5 Monday through Friday. So if something happens outside of business hours, you're pretty much out of luck because we won't be able to get in touch with them. So just a couple things to keep in mind. I'm not saying Bank of America is bad. We've done some transactions with them. We've had some good ones. We've had a couple really bad ones. But I just want you to be aware of that you may want to contact some other lenders to see what your options are and see if you can find somebody competitive that is available 24/7, can do a pre-offer full approval, can get a shorter settlement date and give you all these other benefits as well.
Okay, we'll do that. Yeah. That's a good idea.
Yeah, and you're not locked into any lender. So once you start the process and get your first credit pull, you have 30 days to continue looking for lenders, and you can look at as many as you want to. We usually recommend 2 or 3, just because you're going to get a good taste and a good feel for them. And
what do you recommend?
I recommend you talk to 2 or 3 of them, and I've got 3 that I'm going to send to you, and all 3 of them are very, very good.
Thank you.
Okay. Kelly's talking in the background, so if you see me kind of look over my shoulder, she's letting me know that. And just to give you guys confidence, All of these people are people that we've worked with in the past, but we have no financial relationship with them. If they don't perform, they come off the list. So we have no skin in the game. It's just recommendations. So you guys at least have a path to guide you down who you can talk to and who you can look at. All right. Any questions on this so far?
Oh, we're good.
Good on that. Okay.
Yeah.
All right. So once we have your team built, which we'll work on that on the 14th when you guys get back or around that time frame, then we start viewing properties. Okay. And a couple important factors on your home search. So you found us through Zillow, which is great. Zillow is a good resource for looking at properties, but they are what's called a syndicated website. So when I go and I put a listing in, if I have a seller and I have a property that I'm putting in the MLS, I put it up on the multiple listing service, and then companies like Zillow, Redfin, Realtor.com, Trulia, they come in and they scrub that website and pull the information to put on their websites. When they do that, there's two things. Number one, there's a lag. So you can look at a Zillow listing and you can see when it was last updated. So sometimes it'll be updated 13 hours ago. Sometimes it'll be updated 2 days ago. So you have a little bit of a lag for what's reality with Zillow. The other thing with Zillow is a lot of times if there's a condo fee, it doesn't always show up on Zillow. So you might look at something and think, okay, this is a great property. There's no association fee. Let's go look at it, when there's actually like a $600 condo fee on it. So Zillow is a good source, and I'm not telling you not to continue to use it, but I'm going to be sending you properties from a company called Real Scout, and Real Scout is only available through realtors. And what happens is they update every 30 minutes, and their information is fully accurate because they work directly with the multiple listing service. It's not a scrubbed situation, so the information on it is accurate. So I recommend you use both, just so you make sure you don't miss any properties, but I would use Real Scout as your primary source when you're looking, because that's going to have the most accurate information. Does that make sense?
Yes.
Yeah, okay. So with viewing properties, I just went through all that. Good. So what we have found is, we have the search criteria. We've already talked about this, and I did make the change on your search. You're only in Fairfax County now. So the properties, you won't get any more Prince William County properties. As you're looking at those, if you see anything else that I can kind of narrow it down for you, just let me know. So what happens is, for most of our buyers, the average number of showings to get you under contract is usually about 12 to 13 showings. What that means is we've gone and looked at 12 to 13 properties, and you have a ratified contract. You're actually under contract. Some buyers get a property within their first or second. That happens quite often. Most buyers find the property they like within the first, second, or third. But what happens, and the reason this number is so high, is they're competing against other offers. So quite often they'll have to, put in 3, 4, 5 offers before they finally win a property. So that's why this number is so high. If we get above 12 and a half, and it's for any reason other than like we're putting in offers, but they're, we're just getting beat, but we're putting in strong offers, then we're going to probably sit down and look at your goals and say, okay, is this the right market for you to try to buy in? Because you might, it might be like some of our clients where they just, like I was saying, they may not want to pay above asking price, even if it's a good price for the property, and they just won't go above asking price because they have a rule. Well, in this market, you're going to have to be prepared to go above asking price. So they have chosen to sit out and wait for the market to change. So we just would have that conversation if we got to that point. I don't expect that with you guys. I think that we're going to be in pretty good shape, but I just want to kind of give you that ground line or groundwork. So like I said, low of 2 showings. We had one couple that got up to 46 showings. They did 12 offers and lost them and just kept having to go and go and go. This was in 2020. So that has not happened since, but sometimes it can happen. Yeah, at 10 showings, we'll reevaluate. All right. Any questions on that?
Oh, okay.
Good. Okay. Okay. So once you have found a property that you really like, Then the next step is we're going to make offers and get under contract. So what making offers means that it basically is what would happen is you and I would, the three of us would get on a Zoom call. We would discuss what the market conditions are. We would discuss what the comparable properties say the value of the property is. We would talk about all the terms of the offer, all of the contingencies, you know, the timing of the settlement and all that stuff, what your lender can meet, everything. That first Zoom discussion takes us about 30 to 45 minutes on the first contract. And then after we get that information done, because I'm pulling that information into a summary sheet, I give that to Kelly, and Kelly writes the contract. Once she writes the contract, she's going to send it to you via DocuSign for you guys to electronically sign. But before you sign, we're going to get back on another Zoom call. This is all in the same day. We're going to get back on a Zoom call, and I'm going to go through that contract with you paragraph by paragraph to make sure you understand exactly what the contract says and what it is that you're signing. This first contract takes us quite a bit of time because, you know, this part right here, the 30 to 45 minutes, and then here we can be on the phone for 45 minutes to 2 hours, depending on how many questions you have, because we're going through the whole contract. And then once you guys are comfortable with everything that's on that contract, you're going to do the electronic signature, and then we would get that signed contract back, and Kelly would submit the offer to the seller. So the first one takes, you know, minimum hour and a half, probably 2 hours, 2.5 hours with us on the phone and Zoom together, getting the contract set up. After the first one, you then have an understanding of how the contract works. So from that point on, if we didn't win that first offer, then this process here takes us maybe 10 minutes because we just get on the phone and we just go through and say, hey, does this still apply? Does this still apply? And then Kelly will write the contract, and then usually our buyers, after that first time, they get it, and I might have to answer 1 or 2 questions, but then they just sign off. So from the first offer to the second offer, you know, it's the 2.5 hours on the first offer. Second offer takes probably 30 to 45 minutes of your time for us to get everything put together. Okay, so those are the aspects of like getting the offer written. And again, our goal is you understand every detail of every aspect of that contract, because it's a financial commitment. It's a large financial commitment. So we want to make sure that you understand everything. When we send the offer to the seller, they are either going to ratify the contract, which means that they are going to sign off on everything. They're going to agree to it. And once they sign, then it's a ratified contract, which means it's a binding agreement. They're going to reject it, which means they let us know, hey, we're not going to take it. Or they're going to counter it. And what would happen when they counter it is they go in, let's say we offered 350 and they wanted 375. So they would cross out the 350 and they would put 375 on there. They would sign the contract, initial the 375, and then send it back to us. And then I would present it to you guys. And if you guys agreed to 375, you would initial on the 375, and then it's a ratified contract. So a ratified contract basically means that that's the time and day when the last party has signed the agreement to agree to all the terms of the contract. That's a ratified contract. Okay, does that make sense?
Yeah.
Okay. I know this is a lot of information. I am recording this, and I'm going to send you a recording just in case you guys want to review it. But
that's great.
Yeah. So don't let it blow your mind at this point. All right. So ratified contract, everybody's agreed to all the terms. So that date, the ratified contract date, is when the clock begins. That's the date of ratification. If the contract is signed before 9 p.m., like for example, if we're looking at a contract right now, and if everybody signs before 9 p.m., then today is the date of ratification. If the contract is signed after 9 p.m., because a day ends at 9 p.m. based on the rules of the contract, then if it's after 9 p.m., then it would be tomorrow would be the date of ratification for as far as all the deadlines of the contract. Okay.
Yeah.
All right. So now we are under contract. So the first thing that you do, so from step 3 to step 10 is typically 30 days. Okay. This is a part where the lender is very important. If you're competing against somebody who's got a cash offer, that person can close, which means settle on the property and buy the property from here to here in as little as 10 days. So if you have a lender like Bank of America they can't do quick settlements. They have to have their full 30 days because they're a big bank and they have a lot of paperwork they have to go through. A lot of our lenders can do 14 days if you don't have a POFA, a pre-offer approval. They can do a 14-day settlement. If you have a pre-offer full approval, you also can do a 10-day settlement. So you can compete with the cash buyer, even though you need to have a lender, as long as we can strategically have that pre-offer full approval done and in place. Okay, so that's another reason why the lender is so important. So after this happens, our clock begins. Typically, you're going to have 5 days to send your earnest money deposit to the title company. So what that means is the earnest money deposit is usually 3 to 5% of the sales price. So if it's a $500,000 property, your earnest money deposit will be somewhere between $15,000 and $25,000 to go to the title company, again, that you get to select. So it goes to the title company, it goes into an escrow account, it does not go to the seller, it goes into an escrow account, and that is your security deposit, which is held as an obligation for the terms of the contract. And if you have contingencies in place, then if those contingencies, for some reason, if you, for example, the inspection contingency comes back and you don't like what's on the inspection, you void the contract, you get that money back. If for some reason you don't perform on the contract and it's not for the reason of a contingency, then that money would be at risk. And I'll explain all that to you in detail when we get down to writing actual contracts. But you need to be prepared with at least 3% and up to 5% of the sales price to be due a check delivered to the title company within 3 to 5 days after ratification, either check or wire. Okay, does that make sense?
Is that like a down payment for you?
So it goes towards your down payment. So it's not a down payment, but when you go, so like let's say you're putting 20% down. So this money goes into escrow, and then your down payment, let me get over here, your 20% down is due on the day of settlement. So you're putting in this money here, the rest of the money is due here. But this money that you put in here applies to that amount. So it's credited to that.
So it's like this 3 to 5% is additional money deposit that we do for the settlement, right?
Sort of. So let's say are you guys planning on doing 20% down?
Sort of it, yeah.
Okay, so let's just say you are.
Yes.
And let's say the property is 500,000. So your earnest money deposit is going to be 15,000. Let's just say you're doing 3% of it. So that 15,000 goes into escrow. And then when it comes to settlement, you're supposed to bring 100,000 to settlement for your down payment. Well, this is already here. So instead of that 100,000, you only have to bring 85,000 because this applies to your down payment.
Okay,
So
that's inside that 20% down payment.
Exactly. So that's not in addition, it's a part of it. That's correct. Okay, so that's the earnest money deposit. Your home inspection, if you guys end up doing a home inspection, is going to range somewhere between $350 to $750. The properties you guys are looking at, you're probably looking at about $500, $550 for your home inspection. That again is when the inspector goes in and checks the function of the property. This is different than an appraisal, which I'll show you in a second. He checks the function of the property so you know the quality of the property you're buying. And he is paid at the time of service. So that's done outside of the escrow. Okay, so you need to be prepared for that expense. If we need to have a wood destroying insect inspection, that usually costs you about $40. It's pretty cheap, but just want to be prepared for that. The appraisal is going to cost you somewhere between $500 and $900. That's ordered by your lender. So as soon as you ratify a contract, that lender is going to order the appraisal, and you have to pay for the appraisal at the time they order it. So this and this, those are two fairly substantial expenses, $500 here, probably $750 here, that are going to be paid for at the time of service, and plus your $40 here. So you need to be prepared with about probably $1,200, $1,300 in expenses to get you through the transaction process. Your closing costs, so these are doc stamps, title insurance, title fees, all of the other aspects of the transaction, those usually run 2 to 3%. I always tell my clients to estimate 3%. So you need to plan on an additional 15,000 towards closing costs. So if you're putting 20% down, you need to plan on having 115,000 at settlement. But remember, your earnest money deposit goes towards that, so that's not on top of it. So 115,000 towards settlement, and then you need to plan on having these $3 amounts here during the transaction. Okay, does that make sense?
Yes, yes.
Okay. Some buyers aren't aware of the closing costs, so that's why it's important that we go through that to make sure that you're aware of that. And then your down payment, which we just talked about. Now, the other thing is, so Kelly and I, the way that we're paid is we get a commission on the sale of the property. Our commission, we charge 3% of the transaction. So on a $500,000 transaction, our commission would be 15,000. Our commission is paid by the seller. So you guys don't have to pay that. But our broker does charge an administrative fee of $395. That would be part of your settlement. You guys would be responsible for that, but that's only due at settlement. That's only when you buy a property. If you don't buy a property, you don't pay that administration fee. Okay, does that make sense?
Yes.
Okay. All right. So we have got your earnest money. Now you know all the money that's required. The next step is you're going to have to fulfill all of the lender requirements. So if you have already done your pre-offer full approval, you don't have to worry about this because you've already done everything for the lender. But if for some reason you haven't, then your lender is going to start asking you for paperwork because it's going through underwriting. So they're going to start digging into your finances. It seems very intrusive. You're going to wonder why they need this stuff, but just trust that they do because there's rules that they have to follow. So they're trying to get your loan approved. So they're going to need documentation to help get that approved. So during this first probably 10 days after we ratify, you're going to be rushing around quite a bit, getting all the documentation to the lender. Unfortunately, Kelly and I cannot help you with that aspect of it because it's obviously your personal finances. If we get a home inspection, then we're going to have to go to the home inspection. You guys are going to want to attend that if we get a home inspection so that he can show you the property, show you around, show you how to maintain the property and so on. I'll also be there for the home inspection and the appraisal will be committed. So 5, 6, and 7 are completed. I'm sorry. 5, 6, and 7, these are kind of high activity things that happen in the first 7 to 10 days of after you ratify a contract. So that first 7 to 10 days is going to feel a little bit chaotic for you guys. Just kind of be prepared for it. It's fine. It's a little bit stressful. Everybody goes through it. Once we get past that point, it slows down for you and you're just going to be sitting and waiting. And you're almost going to be like, okay, what's going on here? I'm ready to close. That doesn't mean that there's nothing going on. We're still checking with title's doing their work. We're making sure that all the other stuff is being put into place. But as far as what you guys have to do, that first 7 to 10 days is the most chaotic and then it calms down. So you're going to fulfill all of your lender requirements. You're going to do your home inspection and you're going to get your appraisal done. And then what's going to happen is all of these are potential contingencies. So, and a contingency, basically, do you understand what a contingency means in a contract?
No, actually, no.
Oh, okay. So let's say that we have a home inspection contingency and it's a 5-day contingency. What that means is that you have 5 days after you ratify the contract to get an inspector in to do his inspection, get you the report. You look at the report and you say, okay, I see that there's a couple items on this report, but you know what? I'm willing to buy the property anyway. So if you, after that 5 days, if you see something on that report you don't like during that 5 days, you can void the contract and get your earnest money deposit back, that 15,000 that you put in. So that contingency basically are things that give you the opportunity to successfully meet those criteria. And if you don't successfully meet them, then you get to void the contract to get your money back. And those are good things to have in a contract. The problem is in this market right now that you're going to be competing against other offers that are waiving all of those contingencies. So that's why I'm saying that it's kind of, we want to do the best we can to protect you, but also make your offer strong enough to get accepted. So like that pre-offer full approval, that's like you're getting your financing contingency, because normally a finance contingency takes about 21 days. And that's when the lender does all their underwriting to confirm that they can approve you for the property. If you already have that done, you don't have to have a finance contingency because you already know you're approved. So that's why those steps are important. So up here at this point with the appraisal, then once all of the contingencies in the contract are satisfied, and then the lender is going to issue what's called a commitment letter. And that commitment letter comes to you. There's two commitment letters. The first one comes to you at the end of the finance contingency, and that's where they commit to being, it's called a conditional approval. And that's where they commit to financing the loan for you. And they will, as long as you meet the following conditions, and they label those out. And it's simple stuff like proof of employment, or they may need a document or something like that. And then the final commitment letter, this letter comes to you 3 days before settlement. And federally, it is required that you receive this letter 3 days before settlement. And what this letter does is it is their commitment 100%. You are clear to close, and they are giving you all of the final numbers, all of your final closing costs. And they have to give that to you 3 days early so that you can look at it. And if there's any questions, you have time to remedy it. But you'll get that letter 3 days prior to settlement. And then the day before settlement, we're going to go in and we're going to do a pre-settlement walkthrough. And what that is you and the two of you and myself will meet at the property. We'll walk through the property to make sure that it's in essentially the same condition that it was when you placed the offer, that all of the appliances are there that are supposed to convey, that there's no new damage to the unit, that everything is as it's supposed to be, that what you're buying is what you intended to buy. And then after that final walkthrough, the next day we go to settlement, and that's where you sign the documents and you get your keys and you have purchased a property. So that is the process.
Okay.
Okay. Is your head spinning?
Question back to home inspections.
Yes.
Why is this if applicable?
Because yeah, so you always want to get a home inspection if you can, but if you're trying to be competitive and you're competing against other offers and you have to waive it, you may not have a home inspection on the contract. So that's why I said if applicable, because a lot of buyers right now they're waiving their home inspections.
Okay, if we do the home inspection and the inspector find an issue with the house, let's say windows need to be replaced, or the structure, or I don't know, what's going to happen then?
So you would, as long as if you have the contingency, as long as you're within the time of that contingency, then you can avoid the contract. So that's a good question. So it's going to get a little bit in the weeds, but with your home inspection, you have two options if you do an inspection. The first option is the right to negotiate for repairs or void. And the second option is the right to void only. In this market right now, if you get an inspection contingency, you're going to need to do it with a void only option. And the reason for that is because what a lot of buyers were doing, 3 or 4 years ago, is they would give this really big offer for a property. They would win the property, but then when the inspection came back, the buyer would start negotiating and trying to get the price down. So they would basically lie to the seller, knowing that they were going to use the inspection report to kind of get the price down to where they really wanted to buy it. So buyers started getting savvy to that, and they stopped accepting offers that have the negotiate or void only. So what you're going to do is, if you get the inspection contingency, it's going to be a void only inspection. So what that means is, once you get your inspection report back, everything that's on that inspection report, you get to say, yes, I'll buy it, even though there's these things that are wrong with it. Or you get to say, you know what? No, I'm not going to buy it. And you void the contract and you get your money back. So that's that. We call it a pass fail inspection.
Gotcha. Okay.
Okay. Any other questions?
The lender.
Yes.
So we just tried our bank that we have our deposit. Can we try with other lenders at the same time?
Yeah, absolutely. So you're not committed to the lender. until technically you're not committed to the lender until right here, because that letter they send you is where you're signing off and agreeing to the terms. And then at settlement, you sign the official documents. But realistically, you need to have your lender chosen for when we get right here, because once you're under contract, everything moves so quickly that you don't want to be shopping for a lender when you're trying to meet all these requirements. So for example, the appraisal, that's usually the longest process of the pre-approval process, and that lender has to order the appraisal. So you need to have your lender picked by the time we start looking at properties and everything. You need to have your lender picked with who you're going to go to, or at least be down to 2, so that you can compete them against each other for like a day to try to get the best deal possible, and then move forward with that lender.
Okay, so we have to do that first once we come back from
Correct. Yeah. Yeah.
the first step, right?
Yep.
Okay. Thank you.
Okay. Any other questions at all?
No, I think we're good.
Okay.
First lesson is
Yeah, that's a lot. It's a lot of information. I'm sorry. Hold on 1 second. What's that, Cal? Oh, okay. Yeah, it's a lot of information. So like I said, I'm going to, as soon as we stop this, then I'll process the video and I'll send you the link so that you can kind of have it to, I know you'll probably watch it at least 5 or 6 more times because it's so entertaining. But yeah, so that way you'll have a good understanding of the process. And as we go through the process, when we go through each stage, you're going to get slides like this. And you see right here, there's a summary of what the steps are. So as we get to each level, we're going to send you an email showing you where you are in the process. So you'll have this to review, and then you'll also have this telling you exactly where we are. Oh, ignore that dog.
Can I say something?
Of course.
It's a comment, actually. Your wife is really, really beautiful. I saw in the picture, that's why.
Well, thank you. I will tell her that. I think so too. So I appreciate that. All right. And market reports are going to be very important. So they're going to come to you, like I said, every Thursday or Friday, maybe Saturday if it's been a busy week. And the subject line will read the price report, and it'll have the date. And again, usually they run 12 to 15 minutes. If you want to go just straight to the numbers, I'll give you, Kelly's laughing because we get kind of wordy on them. I will put, at the beginning of the video, I tell you where to fast forward to if you want to just get into the numbers and the graphs. But I want you guys to really focus on watching those each week so that you know what the market's doing. So strategically, we're on the same page as we dive into everything.
Okay.
All right. Any other questions?
I think we're good.
Okay.
Thank you for your time and your help.
Oh, absolutely. And if you have any questions, all right. And I will send over the email with all of the vendors that I mentioned as well. And again, you don't have to use any of them. They're just people that we've worked with successfully.
Okay. Yeah. Thank you. I'll appreciate that.
No problem. Okay. All right. Well, you guys have a good night. And if anything comes up, let me know.
You do the same. Thank you.
All right, guys. Have a good night. Bye-bye.